telling me it's 20 years since I debuted.
You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, everybody. Welcome to Quasar Markets Live. It's Howard solo today. BigBeat is traveling to New York City. I will have Mr. Flanagan, Mr. Forex himself, in to talk and break down everything having to do with Forex and rates across the globe. Because if you don't understand the dollar and yields right now, you're basically trading blindfolded. So here's the setup for today. Stocks are trying to snap a 3-day losing streak. And the S&P futures are modestly higher, and the market's doing the classic. I want to rally, but I also want to see the data first dance. And to be honest, that data first will be tomorrow morning's CPI data. We will see that come out before we come on the air here at 8:30 tomorrow. So we'll keep an eye on what we've got going on there. Quick temperature check on some key names I'm going to hit on this morning. Tesla is sitting at about 489.88. The market can basically smell 500 here. So big move up by Tesla, continuing to move to the upside. So hopefully BigBeat hasn't been shorting over the last few days as we've seen this explosive move. I do think it challenges 500 for sure today. We also have some earnings in play today, led by MU Micron after the bell today, up about 1.8% in the pre-market. Silver absolutely ripping. I know Steve sold his. He was just saying this is too far too fast on our Slack channel here. He claims that we should see a rotation back into crypto when this silliness, as he puts it, wears off. And oil is bouncing a little bit here as geopolitics showed up like an uninvited guest at the holiday party. So here's what we're going to do today. I'm going to give you the macro map. We're going to get a little bit into AI and big tech, talk Tesla and Microns, look at the commodities, and then the movers and the headlines. And at the end, we have, like I said, Mr. Flanagan will join in and go over everything having to do with rates and forex. So the real trade right now is based upon CPI again tomorrow. We do see a lot of positioning happen. Um, the CPI is the light at the end of the tunnel this week for us. It will give us the first view of data that we haven't seen in a bit. So everyone's eyes will be on it. We also had that delayed jobs data hitting the market this week after the shutdown backlog. The big headline being that unemployment rate ticked up to 4.6, its highest since 2021, while payrolls were mixed. So if you got a market that's saying growth is cooling but not collapsing, inflation is the question, and the Fed's path is the lever. CPI rates move pretty fast. They move in multiples, and they move tech, and tech moves the index. So it is important to understand that CPI will be driving the bus there tomorrow. As we about 25 minutes from the open, we're looking to start off in the green. S&P up about 28 basis points here in pre-market trading. NASDAQ up about 40 basis points. Will also point out volatility coming way back down towards the 16 level. I again will mention that you might want to look to buy your protection now if it drops below 16 today. There, I mentioned a little bit, and we're going to get more into gold and silver, but both of them moving to the upside here. Gold trying to break back above 43.50 here. Didn't get all the way to its all-time high, but looks like it wants to push there today. Silver, as I mentioned, broke through 66 for the first time. Nice move to the upside. And copper, as represented by CPER here, up about 1.5%, moving into the morning hours. Bitcoin got back above 87,500 here. Has had a nice little run over the last 30 minutes or so, but really not pulling away. Same thing with Ethereum, still below its key 3,000 level at 29.42. The news there is more that we're not flushing away, but we're also not seeing a true recovery yet. I mentioned we're going to have Mr. Flanagan in a bit. He'll be going over the DXY and what's happening there. But we have seen a nice little bounce back here from the lows that we hit on Monday. Tick is slightly negative, but we do see pretty good breadth in the market. We see about 1,700 to the upside here on advanced decline. So nice little move to the upside so far, looking to see some breadth there. If we look across the levels of the S&P or the sectors, all of the sectors currently in the green. We saw the most strength so far in energy, up about 80 basis points here. And overnight, we did see both the Nikkei, the Hong Kong stock market, and even the European stock market, as represented by the stock 600, all in the green. So it does lead us to maybe a little bit of a nice continuation through the morning hours here today. Good morning there, Zora. Hope all is well for you. Looking quickly at the Mag 7, we had all of them in the green earlier. We do see Tesla taking a little bit of a pullback, not surprising again after the big day it had yesterday, ending up 3%. And as we can see over the last week, up over 10, almost 12% here. So Tesla, a little bit of natural breathing. NVIDIA, a little bit of a different story, still chopping around in that 175 area. And again, this was after we saw a few analysts raise targets yesterday, and I believe it was Bank of America gave it its stock pick of 2026. NVIDIA still not catching a bid there. I will be watching Google closely today. They just announced a possible partnership here with OpenAI. This is the headline to me that matters more than most people realize. Reuters is reporting that Amazon is in talks to invest around $10 billion in OpenAI, potentially valuing OpenAI north of $500 billion. And critically, the reported arrangement could also involve OpenAI using Amazon's chipset. So pretty big there. Let me translate the strategic meeting into plain English there. The last couple of years, the AI trade has been by the shovel company. NVIDIA is the shovel company. But now the biggest buyers of the shovels are saying, if we build our own shovels, what happens? That's what Trainium is. That's what Google's TPU strategy is. That's what hyperscalers do. They vertically integrate because the margin and supply constraints are too important. I will also point out that, Google is really hedging bets, or Amazon, excuse me, hedging bets here, right? They've already partnered, we know, with other companies like Anthropic. So watching Google, Amazon today to see the fallout from these. Google had been on fire based upon the partnerships it had recently made in the AI sector, right, and its investments. Now we see Amazon. Does this give Amazon the ability to really stop what's been a multiple downtrend here starting back in the beginning of November? For me, biggest story again is Amazon is not only going bigger into AI, but they are for sure also hedging bets across the different companies. We do see Netflix up about 1.59 here. Nice little move to the upside here on news that the board has suggested to the stockholders they reject the Paramount bid. A lot of convoluted stories there. We'll get into it in a little bit here down the road. But sticking across Amazon and this partnership, it's sort of like Costco deciding it's not just going to buy soda. It's like it's going to make the Kirkland soda. So the idea is Amazon is not just, going to keep on buying NVIDIA's chips. It is going to try to create its own chipset and move it and partner with the AI companies to get that traction they'll need. If OpenAI shifts workload towards Trainium, it potentially reduces the incremental reliance on NVIDIA's ecosystem over time. It also reframes the AI winners from just the chip makers to the entire stack, cloud, custom silicon, infrastructure commitments, and distribution. And I did notice other chipsets that would be sort of in tandem with a move away from NVIDIA did catch a bid also, led by AMD. Really, Marvell up about 2.9% here today would be some of the winners because they are the chipsets that work pretty much in tandem with Amazon's to provide the same service that NVIDIA does. And it doesn't mean NVIDIA is done by any means. It means the market starts pricing the next chess move, who has pricing power, who owns the customer relationship, who owns the compute supply. It's not about just getting those orders. It's about fulfilling those orders, right? We've seen those problems for companies like Intel over the years. If you're a hyperscaler, why wouldn't you build your own custom chipset? Seems to be the conversation right now. And if you're a customer, why wouldn't you want a multi-source? If you are OpenAI, why would you put all your bags in Jensen Huang and NVIDIA when you could have a little bit of everything? So I like the moves for the AI companies, the hyperscalers, and for the legacy companies too. I think this is a good move all around. We also have to bring up, we are seeing China AI chip ecosystem get some big speculative attention. China-based AI chip maker MetaX surged dramatically after it got its IPO in Hong Kong. Huge oversubscription and frothy multiples being discussed. It's another reminder that AI enthusiasm is global and speculative pockets are real. Right now, the only theme where people will say with a straight face, it's loss making, the valuation is extreme, and that's why I love it. So I do think that these are pretty big moves overall. Mentioned Tesla already. Got to keep your eye there today. $500 is right in the view here. Round numbers matter because humans like to trade them. It's not rationale, it's psychological. And markets are mostly psychology wrapped in spreadsheets. You know what I mean? The bullish narrative is robo-taxi ambitions, autonomy progress, operating leverage, future optionality. The bearish risk narrative is regulators, marketing claims, competition, and the fact that every time Tesla runs, it drags half of retail sentiment along with it. So if we can tag 500 and reject it, it becomes the sell the news event. That would be where I would think Big Beat would be a big shorter at that level, right at 500. If it does clear and hold above 500, we have a new regime and momentum squeeze story, especially into the year end, right? So watching for what Tesla does today, got up as high as 491.50. Any kind of break of that 4091.50, I'm watching for that run towards 500. And that's where it really is the key pivot, in my opinion, will be at that level. Mentioned it already, but we got Micron going into earnings today. They'll report after close. It is trading right about 238, I think it was 235, down a little bit here. Did get as high as 240 earlier, but it has fallen back down. If they can print a strong earning and guidance, it could support the idea that the AI demand is real, persistent, and monetizable across the supply chain. If Micron does disappoint or guides cautiously, it doesn't kill AI, but it could reignite valuation concerns and lead to some compression in those semi-adjacent names because the market will question end demand and pricing. So coming back from Vegas, Micron earnings are like the black light in a hotel room. You may love what you think's going on, but the backlight shows what's actually there. And we'll see if Micron can be a tailwind or is it a landmine on the AI trade soon enough. We're going to take a 30-second break here while I catch my breath. We'll be right back.
Are you an online educator struggling to find your audience? Quasar Markets connects you with learners looking for you. Keep 100% ownership of your courses. No hidden fees. Already have monetized content? Get paid again and again. Apply today. Take control of your educational empire. Quasar Markets, where educators build their legacy.
Okay, let's talk a little bit about metals here. Silver is at records, so it's not just the gold bug story anymore. Reuters reports silver hit record highs around $66. With tight supply dynamics, strong industrial demand, and speculative interest. And here's what's important. Silver is not just a doomsday metal. It is absolutely an industrial metal. Electronics need it. Solar needs it. The electrify everything trend needs it. So we have a two-lane narrative to keep it balanced. It's being bought as a macro hedge lane, currency debasement fears, rate expectations, and risk hedging. And the industrial lane, if you like green energy and electronic demand, there's going to be constrained supply continuing for years. Gold is like the rich uncle in a suit. Silver is the younger cousin who just showed up with a motorcycle and somehow stole the spotlight. If silver keeps its bid, it tells you either the market is expecting easier money supply, lower real rates, or the market expects demand and supply imbalance in industrial inputs, or both. And if the dollar is strengthening at the same time, which it has in spots, it makes it even more notable. So we'll get Mr. Flanagan's opinion on that when he comes in. Is that something he's looking at? And as I mentioned, silver having a nice little run here back up towards 33, 38. I am in a copper trade, as we know, still looking for 36 as my exit in that range. So still holding till that point. Let's get a little bit into the energy sector and oil. We did see WTI had been up over 2% as headlines hit that President Trump ordered a complete blockade on sanctioned oil tankers into and out of Venezuela. That headline, as we talked about, tweet analysis being so important. Venezuela is not the whole world oils market, but the risk premium does move fast here for sure. The market will ask enforcement details, impact on actual barrels, and whether this changes the broader supply outlook. Geopolitics in oil is someone yelling fire in a crowded theater. Sometimes it's real, sometimes it's popcorn smoke. Either way, people run for the exits first and ask questions later. So we definitely want to watch energy equities today for sympathy and watch whether this bleeds into inflation expectations, into the CPI. We won't see it in this month's CPI for sure. And as I mentioned, energy was the early leader in the sectors of the S&P. It still is up about 78 basis points here. So energy definitely catching a bid. Part of that could also be, I saw a couple of articles, especially one in CNBC, talking about the new 60-40 is, the old 60-40 where you invested 60% into equities and 40% into bonds. Now should be including energy instead of bonds, in that it's a safer defensive pick. So it does seem like it has people moving. They pointed out one of the reasons there, something we talk about here on Quasar a lot, is the difference in the crack spread, as it's called. And that's where these companies like Chevron and others can really make a profit, is on the refining of oil. As Steve has mentioned many times, and we talk about here, we have plenty of oil mines already ready to go. They are all set. They're just capped off. What we don't have is enough refineries here in the U.S., and that's why we don't see gas prices that, now they've sort of followed the oil prices after a long delay, but that's why it's been lagging that so far. Rates are moving up today. Part of that has definitely been Fed speak for sure. We had Bostic come on and others and say that maybe there are no needs to, cut rates moving into next year. I didn't like hearing that at all. Their reasoning being that, again, the current administration's tariff inflation is still going to rear its ugly head. So we're going to have to keep an eye on that. We are about 7 minutes from the open. NASDAQ pretty flat on since we've been talking here this morning. Not really a big move there. S&P has continued to move a little bit to the downside so far. Mag 7, like we said. NVIDIA slightly down. Tesla giving up a little bit of yesterday's gains, but nothing big there. Early morning gainers so far today. Hut 8, Bitcoin mining company, on news of their partnership with to provide energy to the AI industry. Again, has them moving up. This is another $10 billion deal, and it has them up at 18.5% today. Hut already was in a position with Google, now adding the hyperscalers and AI companies, more of them to it, has them moving up even more today. I would say this one's getting to a tough area, though, just below its 50-day MA. Key resistance 44.15 here. If you don't break there, watch for a fall back towards the 38 zone. If we can break through that 44 area, watch for a run towards 50, even 52. So it could absolutely squeeze to the upside here. It does have the other names like IREN, moving up about 1.8% so far this morning. Terror Wolf, which trades under WULF, up about 2.8% here this morning. Also, so the crypto names are catching a bid on that so far. Chip sector has been a mixed bag, as I said. NVIDIA, ASML, AMAT, Lam Research, all to the downside so far. Micron up almost 2% leading into their earnings. Nice move up by Marvell here today, up about 3%. Also, looking at financials, they're looking pretty good this morning before the open also, but they had a pretty rough day yesterday. We saw JP Morgan give up about 1.5%. Bank of America and Wells Fargo close to 1%, and Goldman Sachs almost 1.25 percentage points to the downside. We see a reversal of that this morning, with most of them being up about half a percentage point. Laggards on the day, I mentioned Lennar. They did have their earnings. Their revenue reached 9.37 billion, but their net income fell to 490 million. So they, on those mixed earnings results and less than stellar guidance, have it dropped way down here to 110.97. So they are under pressure. That also on sympathy play has DH Horton down about 2% here this morning. They do not have any kind of earnings upcoming or anything else. So with energy and oil taken off a little bit, the other side of that, Nucor, which is really a nuclear energy company, down about 2.6% here today. So they are on the other side of it, and we do see Warner Brother Discovery down about 1.14% here. Again, they can't stay out of the headlines as folks talk about which company will be purchasing them there. So we'll see what we get. Did also want to say space companies seeing a little bit of a bid today. Rocket Lab up 2.74%. ASTS up 2.75%. So nice little bounce back there. Do see some of the AI names like Pony AI also seeing some love this morning. It was up about 7% yesterday, up another 1.34% today. So we'll see what we get there. And Jabil, which had earnings this morning, up about 4.9% here after they showed strong growth in its intelligent infrastructure segment due to increased demand in cloud and data centers, with positive results in regulated industries and connected living. So nice move up by Jabil on their earnings here, up about 5% in the pre-market. We are 2 minutes from the open here. The tick is fairly flat. Advanced decline has pulled back a little bit to 1600. As I said, we were above 1700, and we do see the S&Ps and the Qs moving to the downside slightly as we get ready to open. VIX has moved back down below 16 here, so it gets very interesting for me over here. So we'll see what's going on as we get into the open here. I'm going to do a quick commercial right before the open to catch my breath.
You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
Okay, everybody, we are 1 minute from the open. I am watching some penny stock here, pumpers, looking at ATPC up about 70% in the pre-market, looking to regain VWAP here. The upside market is open. And then the big one I'm watching, VYNE here. Let's see what we get on the open. First moves a little bit to the downside here, but watching them at 70 cents for a run towards $1. And if they can break through that dollar, watching for a run back up to close the gap towards that $1.50 area. So do have some penny pumpers we're watching too. ADTX, another one on watch this morning. As the market is open here, let's take a look. First move on the Qs is to the downside. Wow, trying to break through the morning downside. 612.49 is the lows of the pre-market. So it does look like it wants to try to break back below that. So not a good start off the first few ticks. But as we know, a lot of times that first move is in the opposite direction of what we see for the rest of the day. S&P also to the downside a little bit, only up 10 basis points now. We do see the Dow Jones did move up on the open, up now about 19 basis points. And the Russell 2000 is up about 17 basis points here. So definitely things to keep an eye on. Bitcoin holding up on the open, continuing actually to move to the upside. Nice little move here. Trying to break above yesterday's highs already. That could be a nice move. Could get us a little bit of a run towards 91 there. Same thing, Ethereum here trying to break back up towards that 3024 mark. So we'll keep an eye there. Other early morning movers here. Firm continuing its upside move. Yesterday really had a nice day. Now up another 1.57%. So a firm definitely still catching love here. Got some pretty good room up to 78, trading at 74 and change here. So you definitely have some continuation plays. Like we said, today's not as much about the ETFs, in my opinion. You want to be more focused on individual stocks than the ETFs today. Do see some profit taking happening here across Hut 8. Albemarle is another one that hit an all-time high here, 137.57. Nice move to the upside. We do know metals company there. That's a play on mining and metals and materials, up 4.62. Israeli military company AESLT, defense contractor in the aerospace and defense, up about 4.3% here. Not sure. Haven't really seen any news there. But we know that there's been issues with Syria and Israel, as there may be some more stuff going on there under the scenes. Early morning laggards, Lennar, still not really bouncing back. It made one attempt, but is pulling back down, still at 112.50, down about 4.5% after its earnings. Fortinet is down also about 1.5% here. It is bouncing back off of the lows of the day. We talked the other side of that oil trade is Nucor. If we're going to get cheap oil, people don't need a nuclear quite as quick, I guess, as the play here. They are down about 1.63% here. Let's see if anything else is moving on. Hut 8 back up 15% here. We do also see Recursion Pharmaceutical up about 11.69%. Same thing, Polybelly up 10.3%. I mentioned Jabil already, up 6.14%. The ticker LITE, LITE, which is Lumentum Holdings, another mining company, up about 5.52%. They pulled back last week pretty hard, so nice little recovery here by them. Pony AI up about 5.43. And again, some of the AI data center names getting some love here in light of that partnership between Hut and OpenAI. We see Cipher Mining, we see Core Scientific, we see TerraWolf, we see a few of the different crypto names towards the top of today's risers. Nice little move up by SanDisk here again. Again, another one that had pulled back here over the last few weeks, getting some nice moves to the upside again. On the other side of that, things on the downside, most of these look like they are Chinese name, pharmaceutical. Paramount Skydance down about 4.76 on that decision by the Warner Brothers board to not recommend their hostile takeover bid. So see a little bit of bleeding there. We do know that President's son-in-law Jared Kushner has pulled out. Talk on CNBC this morning was, will the Saudi money pull out with Kushner leaving? So Lennar, like we talked about, down about 4.26%, but off of lows of the day. Progressive Insurance down about 3.93% here this morning. And Celsius Holdings, another one down about 3.24%. Oracle continues to remain under pressure here, now back down at 182.96. So definitely still seeing a lot of pressure versus Oracle here. Tick pretty muted. Advanced decline has moved back up. We're seeing we have about 2,000 stocks in the positive here. Dixie DXY holding up above 98, but couldn't hold that 99 or break into that 99 level yet. We do see Dow Jones is still slightly up about 20 basis points. S&P flat on the day, and the Qs took a dive here. Looking at the Mag 7, NVIDIA leading that downward move, down about 2.3% here, 173.76. It's coming up on key support here in that 171 area without a doubt. We do see also Google down about 1.12%, Meta down slightly too. So no real breakaway. Tesla, though, moving back to the upside. As I mentioned, I expect to see it challenge 500 today. Looking pretty good so far. Just broke above 491. Sectors of the S&P were all in the green before open. We now see utilities, technology, industrials, and communications all slightly in the red here. Energy still leading the way up 90 basis points or so. Real estate having a pretty good day, and the banks having a good day after yesterday's down day across the banks. Like I said, we see Goldman Sachs up 1.16%, Morgan Stanley up 1.3%, Bank of America up almost a full percentage point, and Wells Fargo and JP Morgan also showing strong movement today. Udemy up about 27% here. UDMY on merger talks with Coursera. So two online educational service companies looking to partner up. I think it's a good partnership there. Also, they are up about 27% here. Also seeing Akanda Corporation, AKAN, nice move to the upside here. Looking to break out here. If it gets a little bit of love here, breaks $1, watch for a nice move up towards $1.25 or so. It goes pretty quick. 103 just broke $1. That's a big level for these penny stocks. So watch that one for movement to the upside. If it could hold $1 here, could see a nice little run on that. Seeing a little bit of sell-off here, not holding up the levels. We see the Qs are now down 10 basis points. SPY still flat on the day. The small caps are leading the way, up 33 basis points. Gold again, 43.34, up 74 basis points. Silver can't really regain the 66 handle. Bitcoin nicely holding up right now and above that 87 area, but couldn't hold the 87.5. And you can see really rejected for the second day in a row, right at 88K. So 88K is definitely that line in the sand to keep an eye on Bitcoin. And we know on Ethereum, it really is 3,000. So the Chinese names getting some love here. We see Alibaba up 1%. Most of the Chinese names were down yesterday after less than stellar economic news out of China. But we see a little bounce back by Baba, Baidu, JD, and others today. I do see Mr. Flanagan has come in early to give me a hand here and talk about everything going on. So let's get him in here and see what's going on. Steve, how are we doing today?
Doing well, and really excited over Fed Waller's comments. No rush to cut interest rates. Great. Okay. I think that sets a nice tone out there for both sides of the aisle or the market, bulls and bears. But 2 points that he made. There will not be a reacceleration of inflation. That was huge, I think, because that mindset of the Fed's always talking about inflation. The second point, we're 0.5 to 1% over neutral. He has just laid out, instead of the rearview mirror look, he has just looked out through the windshield and let the markets know where he is thinking we're going. Fantastic type of forward guidance. And I think that that is behind a lot of the market. One, that no rush creates an FX move where the dollar is suddenly sharply rebounded. And the second, for the U.S. equity markets, he's now pointed out 0.5 to 1% above neutral. So if the Fed's guidance is for neutral based on the labor market, then, the path is quite clear here.
Except that on the other side of that, Mr. Bostic came out yesterday. He has a vote also, and he said no rate cuts in 2026 due to worries that the GOP tax bill might fuel inflation. So, there's definitely there's definitely going to be, whoever takes over is going to have quite a job in getting folks on the same bus, I think, in that room right now.
Yeah, but Bostic is old school. He's on the way out, because he's just a textbook-driven, guy who is just totally missed the boat on all of this. And Fed Waller is up for, the nomination potentially of Fed
They're
chairman.
going to take him out of it. He made a couple of comments that took him right out. So he's already knows he's out, in my opinion. That it's down to the Kevins, because he said, I will make it clear to the president that I do not take input from the White House, that it is going to be independent. So we know the president isn't going to like that comment. And again, like you said, if he's only willing to say we're only 0.5 point to 1 point below, that's not where the president feels. He wants to get back towards zero.
If we go to zero, and you and I both would know that means there's a disaster going on. So
I agree.
From a longer term perspective, 3% would be an ideal neutral level where
We've talked about the fact you have to have levers to both sides. You and I both feel, and that, whether it's 2 or 3 doesn't really matter. It's more about having the position there. But like I said, I think the issue is going to be more getting consensus. The president will have a lot of say in that. As you mentioned, Bostic retiring still looks like he'll go after Collins, although that rhetoric seems to have slowed down a little bit, unless it's just waiting for courts to decide things. And then we'll go from there. And and the big question mark within there is, what does the Supreme Court decide when it comes to these tariffs? They started that. I haven't heard anything about when that finishes.
January, I think, will be the date, probably early January. And, watch for a 5-4 decision, which, okays it. And typically, you'll see then Congress redefine your law. There is a loophole, some ambiguity in the law. So, but that's another thing that's out there, a hurdle that we have to watch. But the reason we focus on interest rates here is because interest rates are the tectonic plates underneath of the currency market. Certainly, when you look at the Fed's dual mandate, everybody talked about the employment numbers. What I jumped out of my chair at was the U6, which is the all-encompassing, the broader measure, went from 8 to 8.7%. Now, this includes marginally attached workers, those who are trying to find work. It also includes the discouraged workers, those who have stopped looking, maybe because of transportation to a job or family issues or personal issues. And it also includes those part-timers who would like to work full-time, but for economic reasons, they can't, whether it's the company making financial decisions and keeping the staff in part-time so they don't have to pay benefits. But this is an all-encompassing, and the fact that it's back at 2021 levels, which is COVID era, I think is a shock, and the Fed has to pay very close attention here. So this is a real employment indicator. It seldom is talked about, It includes the payroll data, what we call U3, but it shows a much broader vision. So interest rates are the tectonic plates. Let's get into talking currency. The DXY 98.44 right now, and 98.46 moving up even further. Last week's close 98.39. I like the dollar. It did set a low on the yesterday at 97.87. So I had talked about being long. The December 11th low of 98.13 was crucial to me. It broke. I dumped my dollars. I was long dollars against sterling and against the euro and against Canada. And when the Dixie broke, I dumped them all. However, just to show you how I trade against these technical levels, we had a low of December 11th, 98.13, December 15th, which was 2 days ago, 98.14 was the low. So I held on that, but I sold last night. However, when we came back above the closing of 98.21 and now back above that 13.14 level, I jumped in and reestablished my longs because got head faked out. The market took me right out. They knew where the market understands pain levels and thresholds so well because the markets trade, everybody trades off of technicals. That's one thing that we all must keep in mind, that every person trading has the same available data and inflection points in which to react. The beauty of technical trading is in the eyes of the beholder, the person who's looking at it. And so I disciplined through reacting, because it's so important that you have a strong discipline. When you go, yeah, but it really doesn't look like it's going to break, it breaks. And then you're like, yeah, let me just give it another 5 points. That's where you begin to turn, big losers, which then takes a lot of days to make back the profit. So discipline, I'm out. It reestablishes the level, then gets over the close of 21 from yesterday, and I jump back in. Now, 98.39, last week's close, we're presently above that, 98.46. Now that's my stop loss. So I can't lose money on this new position I have. I do have a loss, but I can't lose on this particular one because I'm going to cut if we get below the 98.39 level.
It shows us at 98.38.
Right now we're at 98.38.
That's what I'm showing. Yeah.
Okay. I am showing 98.43, but I could be a slow update here. So, but I'll re-examine that, and that would be where I run out. Why? Well, we've got the ECB tomorrow. They're expected to do nothing at 2%, and it'll be a dovish hold. Why is it a dovish hold? Just look at all the numbers coming out of Europe. So abysmal. I mean, the Italian inflation number was down 0.2%. They're now running at a yearly level of 1.1. And this is the next dilemma for the central banks. Once inflation comes down to 2%, and then it starts going on the other side, what do? They've driven us into this low inflation environment. People say it's stubbornly high. You got to open up your eyes and look globally. China's going into deflation. European CPI is all dipping down. They're at 2%, just above the 2% inflation. In fact, the Eurozone inflation did come out. Where did I write that down? CPI was minus 0.3 today, running at a yearly rate now of 2.1%. So what do they do when it goes under? Italy, the third largest country, is already well under, almost a percent point under. Now the Fed has got the same dilemma coming because CPI today was lower. And you're going to end up in a situation where this deflationary wave continues to rock our way from Asia to Europe and coming our way. And you're going to be caught in a dilemma where you don't need rates this high anymore because you're chasing after a ghost that no longer exists. In the textbooks, it does. And that's what the Fed is guiding their policy. And hopefully the new blood is going to change that. Anyway, then we have Bank of England. And so I've got the euro at 117.25.30 level here. That's below last week's close of 117.38. That makes up the biggest part of the dollar index. Yesterday's high was 118.04. And the resistance was at 117.67. So if you want to know why the Dixie went, look at the euro dollar. Euro dollar went up to 118 and you got hammered back down. And that, of course, moved everything.
Right.
Sterling has, the UK has their Bank of England meeting tomorrow before the ECB, and they're expected to cut 0.25%. Now, sterling charts look a little different. It has failed at the 134.70 level. You have the unemployment number coming out now 5.1%, which is higher. You have the CPI coming out at minus 0.2, still around the yearly level of 3.2%, but that's sharply lower than the previous at 3.6. So that's trending down. And you have retail sales minus 0.4. So you've got a cratering condition in the UK, along with a budget that's been floated that's got taxes in it.
Right.
So the component,
yeah, I mean, definitely weakness there, and expectations of a rate cut there for sure.
The components of the dollar index are all indicating to me dollar strength. The last to go will be Friday when we walk in Thursday evening our time. Will be Bank of Japan making a 0.25% rise to set to 0.75% interest rate. But that's going to be one that's, I say, watch the comments, because to me, Bank of Japan is kicking and screaming and then raising rates. They don't really want to. The economy in Japan is showing signs of life. Inflation, though, is dropping again. And remember, Japan is 25 years of fighting deflation, something that China is entering into. And so they're not going to be so keen to keep raising rates if inflation begins to ebb in Japan. So a lot to look at in the next 24 to 48 hours globally. All of it comes to roost in the dollar index. I think if you can stay above your close level of last week, the dollar index looks like it could move in partnership, which would be something unusual with the equity markets here in the U.S.
Okay, yeah, we don't normally see that, but we saw them go down together. So seeing them rise back up together is sort of the what I'm looking at, right?
Great point. Yep. So
Awesome.
A lot out there in the market. A couple of points I would like to just quickly make, Howard, if I can. I talk about this quantum convergence and the economies of the world all beginning to move into some sort of locking system. Let's just look at two quick elections or two possible moves here. Bulgaria, the government has just resigned over the failure of a budget, which is indicating tax hikes. Mainly, it's an anti-corruption protest that has forced the government to resign. But that now is looking as if it could go on for a while. But watch out for the people's type movement coming back into Bulgaria, another area of Europe that we want to look at. Second, Chile. Chile just had a landslide election victory for the right of center candidate, Jose Antonio Cast. 59% to 41%, a landslide election. Latin America, South America, so another country that is now moving into lockstep economic alignment with the United States. The last point I would like to make to everyone, the interest expense on global debt this year is now anticipated to be $4.9 trillion globally. That's up over $1.6 trillion over the last 3 years. And during this last 3 years, the global debt has risen 55 trillion. Gold is up 142%. You want to know why gold and silver? Silver perhaps because of industrial use, but gold, why gold is up? Because look at this rising debt. Now, what is debt used for? We can highlight Oracle. Debt is used to finance what's coming up. It's the way people go add debt to the market, to themselves, and then use that money out to R&D, infrastructure. Most of the cases, a lot of times with the bureaucracy and governments, it's wasted. But that's the primary reason you would be going for debt. Is that good or is that bad? If the economy stumbles, then you are in a very bad position. But if the economy rises, you're going to rise with the cream to the top because of the investment that you made. And with that investment, the debt goes down because of the rise in the marketplace. So something I just wanted to point out.
Absolutely. Great points there.
Yeah, this is a great positive, potentially. While the headline looks negative, potentially it could be another part of this positive equation I've been painting.
Absolutely. I agree with that fully there. Mr. Flanagan, giving us all the knowledge, like always. Appreciate you so much for being here. Any last words for us before we head off?
Well, I'll see you Friday. Friday, I believe, is going to be an interesting morning. I am watching this market very carefully to see if the wheels begin to, the rubber hits the road here and we begin to see an updraft. Like I said on Monday, I think next Monday, we're going to be in an entirely different world of trading with a lot of this information behind us now. So
absolutely. We're finally getting the data that some traders need. And as I said, take the weekend, or as Mr. Flanagan said, I think they'll take the weekend to digest it. And on Monday, get ready to rumble, right, baby?
And that's right. And what is it? It's an abbreviated week of trading. And the following
most of the hedge funds are gone. So it's retail versus retail next week. Let's get at it. Everybody, we'll see you tomorrow morning. I believe Steve is back tomorrow morning and then off on Friday. So we'll go from there, everybody. Have a fantastic day from Quasar Markets.